Welcome to the Tech Stocks Daily Podcast, the go-to source for all the latest updates on technology stock movements and industry insights. In today's market activity, NVIDIA Corporation stood out as a decisive player, leaping to the forefront of tech news due to its remarkable forecast ahead of its upcoming fiscal 2024 fourth quarter earnings release. Analysts have projected a staggering 239.1% year-over-year revenue surge to $20.52 billion, coupled with an expected EPS leap of 425.8% to 463 cents, spotlighting the company's astonishing growth trajectory. This forecast rides on the back of a solid fiscal third quarter performance, where NVIDIA's non-GAAP gross profit soared by 308% and its net income by an impressive 588.2%, outpacing the same period in the previous year. What's even more striking is NVIDIA's recent significant market cap uptick, positioning it as the third largest amongst the formidable Magnificent Seven companies, inclusive of tech giants like Microsoft and Apple, despite its comparatively smaller size in terms of revenue and total employees. This shift underscores NVIDIA's dominant role in the burgeoning AI and quantum computing sectors, underlining the investor community's robust confidence in its future growth prospects. Despite the buoyancy surrounding NVIDIA, it's essential for investors to tread with caution, considering the company's valuation metrics, which tower substantially above industry averages, stirring concerns over its stability and valuation grades as per Power Ratings. With investors eagerly awaiting its quarterly earnings disclosure, NVIDIA's stock trends have already mirrored the optimistic outlook, evidencing a notable increase of 28.8% over the past month. Today's discourse about NVIDIA encapsulates the broader dynamics of technology stocks, reflecting a keen investor interest in companies spearheading innovation and technological advancement, albeit underscored by vigilant valuation scrutiny. Amplitude made headlines today due to a securities fraud class action lawsuit that shines a light on its business strategies and disclosures. The lawsuit concentrates on Amplitude's land and expand business model, where the company aimed to grow revenue by upselling existing clients on increased usage and new products. However, allegations have surfaced that Amplitude made misleading statements about the effectiveness and timeline of this strategy. The complaint argues that Amplitude failed to disclose that its strategy was years away from significantly accelerating revenues among its newer client cohorts, and that the rapid acceleration in its Q2 2021 results was not sustainable, but rather due to the ephemeral effects of the COVID-19 pandemic. As a result, when the company announced its Q4 2021 financial results and revised its fiscal 2022 guidance downwards, revealing that its land and expand strategy would take a few years to actually accelerate results, investors faced a startling reality. This revelation led to a sharp decline in the price of Amplitude shares, which crashed $24, spotlighting the challenges and uncertainties that Amplitude faces in realizing its revenue growth acceleration ambitions. Meta was in the news today due to insights provided by CEO Mark Zuckerberg about his unique management style and its reflection on the company's operations. Zuckerberg shared his views on leadership and decision-making at Meta, emphasizing a reluctance to delegate extensively. This perspective gives us a glimpse into the centralized decision-making processes at Meta and how it might influence the company's strategic directions and innovations. In today's news, Apple finds itself in the spotlight due to a security scandal involving its App Store. A counterfeit cryptocurrency application posing as the Rabby Wallet crypto service has swindled Apple Inc. App Store users out of thousands of dollars. Despite being a fake, this app managed to secure approval from the App Store and has been operational for years, causing significant financial loss to unsuspecting users. This raises significant concerns regarding the efficacy of Apple's App Store review process and its capability to protect users from scam apps. This issue gains further importance in the light of Apple CEO Tim Cook's commitment to security and the potential impact of the European Union's App Store regulations on the company's security efforts. Today, Datadog made headlines thanks to its update on financial performance and business outlook. The company, renowned for its observability and security platform for cloud infrastructure and applications, has notably raised its 2023 outlook, citing strong demand for its offerings. Despite experiencing a 27% boost in revenue in 2023 and forecasting a revenue increase of about 20% for 2024, the report initially caused some investor concern due to its earnings guidance and revenue forecasts slightly falling short of Wall Street's expectations. However, the company also shared some promising signs, such as an increase in customer numbers and a notable rise in the adoption of its products. Furthermore, Datadog highlighted an impressive year-over-year growth in its remaining performance obligations, RPO, which signals a solid future revenue pipeline. This mixed bag of results and projections offer a lot of room for discussion. Does this signal a temporary slowdown for Datadog, or is it a precursor to more significant challenges? With digital transformation driving businesses more than ever, Datadog's role in this ecosystem remains critical. What are your thoughts on Datadog's latest financial update and their outlook for the future? Are these the growing pains of a rapidly scaling company or signs of a broader trend affecting the tech industry? Drop your insights, opinions, and analyses in the comments below. Let's delve into this interesting phase of Datadog's journey together. Today's market sentiment is a vivid depiction of cautious optimism intertwined with a keen eye on strategic developments within leading technology firms. NVIDIA's remarkable revenue and EPS growth projections ahead of its earnings release have instilled confidence among investors about the company's robust fundamentals and potential for sustained growth, particularly accentuated by its substantial strides in AI and quantum computing sectors. Conversely, Amplitude's situation sheds light on the complexities and challenges that companies can face when executing aggressive growth strategies, such as the land and expand model, especially when unforeseen circumstances like the effects of the COVID-19 pandemic recalibrate market realities. Meta, under the distinctive leadership style of Mark Zuckerberg, demonstrates the market's attention toward corporate governance and the impact of top-down decision-making on a company's agility and innovation capabilities. Similarly, Apple's silence in the news today might signify a period of anticipation or a refocus on strategic initiatives not yet public, reflective of the broader industry's continuous evolution and investors' alignment towards long-term value creation. The day also highlighted that challenges and opportunities coexist within the tech sector, prompting investors and stakeholders to weigh optimism regarding technological advancements and growth prospects against the backdrop of market volatilities and strategic uncertainties. Reflecting upon this day's activity, listeners are encouraged to share their thoughts and views on these developments. Do you see these events as pivotal moments for the companies involved or the tech industry at large? What implications might today's news have on market trends and investment strategies going forward? Your insights are invaluable, and we look forward to engaging with your comments on these intriguing dynamics. Focusing on NVIDIA, and considering today's compelling news regarding its anticipated earnings release showcasing substantial revenue and EPS growth projections, my inclination would lean towards a buy stance. The aggressive growth metrics, highlighted by an estimated revenue surge of 239.1% year-over-year and an EPS leap of 425.8%, position NVIDIA as a potentially lucrative investment. The company's solid fiscal third-quarter performance with significant increases in non-GAAP gross profit and net income further underlines its financial health and operational efficiency. Additionally, NVIDIA's pivotal role in AI and quantum computing sectors, paired with its strategic positioning among the Magnificent Seven tech giants, bolsters confidence in its long-term growth prospects. However, it's crucial to carefully consider NVIDIA's valuation metrics, which stand substantially above industry averages, potentially indicating an overvalued stock susceptible to market corrections. Thus, while the growth prospects are enticing, risks associated with high valuation should not be overlooked. Financial disclaimer: this analysis is for informational purposes only and should not be considered financial advice. I am not a financial advisor. Recommendations are based on today's tech news and market overview, without considering your financial situation, investment objectives, or risk tolerance. Markets are unpredictable, and investing in stocks carries risks, including the loss of principal. Always conduct your own research and consider consulting with a financial advisor before making investment decisions. Given the substantial growth prospects amidst the challenges of a potentially high valuation, NVIDIA presents a compelling case for a strategic investment, provided investors are comfortable with the associated risks. In conclusion, today's market activity provided a spellbinding glimpse into the fast-paced world of technology stocks, with NVIDIA's impressive growth projections standing as a beacon of investor interest and confidence in technological advancement. Meanwhile, Amplitude's legal challenges and Zuckerberg's insight into Meta's leadership dynamics offered a nuanced look at the challenges and strategic considerations within major tech companies. As we navigate through these exciting developments, your insights, perspectives, and discussions enrich our understanding and appreciation of the evolving tech landscape. Be sure to like, subscribe, and share this video with others who share your passion for tech and the stock market. Join us again tomorrow for another daily roundup of the most compelling stories in the tech stock world. Your engagement helps us grow and continue to bring you the latest from the rapidly changing world of technology investments.